Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq 100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq 100. And Chris, as we come into the close here, we're seeing stocks give a little bit of that gain back, opening higher based on the news that China is starting to reopen again. And that really is one of the pillars to getting the market back on steady footing here, or at least, one of the items we could check off the list.
You're right. We're seeing modest gains today in another choppy session. And really over the last 2 months, it's been noted that most sessions every day are very choppy, very different from where we were about a year and a half ago, where you opened is where you kind of closed in that time frame. The China news is seen as modestly positive on supply chain issues there, and that could give a nice boost to a backlog. You see a number of companies coming out today with news that they have significant backlogs, so that's always a positive there. But again, it's speculation. We need to see what happens there. Beijing can change their mind in a heartbeat, but it would be nice to see.
And Chris, if we take a look at your first chart here, give us some updated technical levels to watch.
Right. So the index opened today at 12,745. The level we'd like to see close above today is 12,736. We're struggling there right now. We're at about 12,600 right now. That 12,736 level is the first Fibonacci retracement from the May 20th lows of 23.6%. The index has been struggling for the last 6 days to gain a foothold above that on a closing basis. And when we did have one on last Thursday, we failed to keep it on Friday, and we're looking right now as if it's going to be difficult to move across that. That would be the first leg for a nice rally here based off of the 52-week low, again, on the 20th, which was about 11,500. Items to watch, support here. Yep, no problem. So if we fail to regain the open at 12,745, support is tight at 12,565, 12,360. We fail to hold that 12,360 level, we're going to retest the 12,000 level. And the target here, if we can hold above the close, which means we hold the Fibonacci level, is a shot at moving back to the 50-day moving average, which is something we have not seen for a significantly long time. And that stands right now at about 13,300.
And Chris, if we take a look at your last chart here with the constituents that are leading the way.
Right. So more gains than losses, essentially here. Some nice names at the top. Obviously, Amazon is one of the leaders on the point gain. Following today is the first day of trading post-split on that 20-for-1 split for Amazon. They're up over 2.5%. Alphabet's up likewise. Facebook and then Tesla is having a nice day with Elon Musk walking back some comments on job growth over the weekend for them. And then also, what's nice to see, Keurig Dr. Pepper, ticker KDP, is up over 5% of being added to the S&P 500.
All right. Appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.